Japan. Let's bring in at this point Mark Todd, who joins us from FIIG Securities. Mark, good of you to join us, and this is an interesting one, the idea of rate cuts being priced in Australia. I mean, is that even something to consider, or is that money markets and trading going wild?
I think, Brooke, we've been talking since the end of last year that we didn't think there's going to be any change in the RBA rates, and the RBA have consistently saying that there's not going to be any change. So trader activity is something the RBA looks to try and ignore. So I think what we're seeing today is a flight to quality. There's natural conservatism. The equity markets are all over the place. So you buy bank bills, you buy bonds, you know, you move your cash into conservative assets. But I don't really think anyone expects a rate cut. We've seen the RBNZ cut. We've seen in Japan, obviously they've increased the funding there, but I don't think that we're going to react until we see real data to make it react. And the RBA, I think they quite like ignoring the traders, so they'll sit on what they're doing at the moment and monitor the situation. And
so what, from the RBA's perspective, I mean, it will look through the Japan disaster, will it? Can it completely ignore that?
It won't completely ignore it. It's a massive trading partner, so we'll look to see what the trading receipts look like. So it'll be more about our activity and how we respond to it rather than solely what the Japanese do.
How do you feel the RBA is viewing also the issue of the consumer in Australia? Because there seems to have been some sort of shift. We've heard from Westpac's Kurt Zuber, and he's been saying that there's been a structural shift. There's some sort of permanency to this more frugal consumer or this more conservative consumer. Do you agree with that?
Well, it certainly seems that way. I mean, structural shifts mean, in its very nature, the permanence of it. So, you want to be careful with that language, but it certainly seems that the consumer is saying that the volatility that we're seeing right now is too much. And so they're looking to, we've been talking about this for a while, that rebalancing of their investment portfolio. So they're getting more conservative. If you look at 2011, the news coming out everywhere is something that would want to make you be a little bit more conservative, whether it be earthquakes, floods. It's hard to say let's go and start buying equities because we're confident. Who would think that BHP would be suffering like they are as a result of the Japanese? It's not something you can predict, so it would tend to make you more conservative.
Kurt Zuber from Westpac also mentioned he doesn't see any easing in the funding pressures. So just going back to that issue, do you agree with that one?
Well, that's right.
Yeah.
I mean, we're not seeing anything in the wholesale market that suggests that it's going to ease for Kurt and the Westpac and all the four majors. They're still big borrowers offshore in the long-term markets. So that spread has come in a little bit. They're able to borrow at the 150 over 130. The problem for them, all the banks, is that the cash rate's at 4 3/4. So they've got a ceiling. It's where they can lend that money. So there's still small margins in these mortgages at the moment.
Are we still seeing reductions in mortgages though?
Yeah, I mean, that's an irony, isn't it? We're seeing that the four majors are competing very hard for the mortgage market. We've even seen some of the CUA, some of the fifth pillar come in and now compete for the mortgage market. So there's an irony in that the cost of funds are still expensive, but they're still trying to buy back market share.
How competitive is the marketplace at the moment for term deposits to get people's money in the bank and obviously partly deal with the funding issues that the banks have got?
That's right. So I think Kurt was talking about his deposit market's now 52% up from, I think it was 46. So it's important with the implementation of the Basel III requirements that Basel III wants the banks to take on a greater percentage of retail deposits, and the best way to do that is through the term deposit market, and we're seeing great growth at the moment in term deposits. We don't see that stopping. It's growing at a reasonable clip and it's sustainable at the moment.
What sort of rates are you telling people that they can expect?
I think 1 year's trading at about 620, 640. That's the sort of rates you'd expect to get. The banks want 1 year money, so they're being quite competitive on that front. So if cash is at 4 3/4, 620 seems to be a good rate.
Thanks so much, Mark. We appreciate your time. Thank you.
Pleasure. Take care.
Mark Todd, Director, Institutional Relationships, FIIG